Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, quite a bit of volatility, especially on Thursday of this week. The S&P 500 experienced its largest reversal intraday since back during April when we had the tariff-driven volatility. And also, big week, we had mixed signals from the September jobs report. Government shutdown is over. That means we're starting to get that backlog of labor market data to be released. And although it's all the way in September, we actually did get a bit of information around revised job openings, and it was a little bit mixed overall. And finally, that Fed cut in December is still very uncertain. There seems to be a lot of back and forth. The minutes from the Fed meeting were released on Wednesday. We had a lot of comments from different Fed officials. There seems to be strong disagreement, as Powell was quoted recently, within the Fed. Now, speaking of volatility on the chart here, we have the S&P 500 daily percent range, and on Thursday, something unique happened. The S&P 500 started in early trading, was up 1.9% early in the session. That is a really strong day. It was not able to hold that gains, which isn't necessarily surprising on its own, but what happened was we had significant selling. So it went from 1.9% all the way up down to a negative 1.6%. The difference between those two being the largest intraday reversal that we've experienced, as shown on the chart here since back in April when we had some massive, more than 10% intraday reversal there during the market bottom. So really strong volatility, even though NVIDIA reported strong earnings to start the day. We had that September jobs report come out, which was a little better than expected in terms of jobs payroll growth during the month of September. But that gave way to selling. And let's unpack some of the reasons why. If you look at the September jobs report, you can see it came in at 119,000 new jobs. On the surface, that is actually pretty good. Economists only expected there to be 50,000 new jobs expected. Now, why was this reaction not necessarily what we might think? Now, a couple things happen. You can see a couple months during the last quarter were revised lower. August now down to a 4,000 job loss. And you can see also the unemployment rate jumped slightly from 4.3 to 4.4%. But we also saw a lot of the selling around that AI related stocks, which have been a little more interest rate sensitive just because of the amount of money that some of these large mega cap companies are spending on AI related investments. There seems to be a growing concern about are they going to be able to get a return on the investments, especially when you look at some companies, not necessarily NVIDIA, but some of the outside the Mag 7 companies that are financing some of this with debt. And there tends to be a little bit of a concern around the AI bubble, and some of that sentiment is bubbling up here quite significantly over the past week. Now, that Fed cut in December, if you looked at it about a month ago, we were observing around 70% probability, but that has come down significantly. And the probability of the Fed not cutting has increased. And the Fed meeting minutes were released from the month of October's meeting. And Powell actually previously said, hey, we had some strongly differing views. And the minutes did showcase that. There were some members that were saying, hey, we need to pay attention to inflation. We're worried that it's not moving toward that 2% target. We're worrying that the market is not viewing that 2% as a real target. And we're worried about that coming up higher. And others on the other side were saying, hey, we've seen labor market slowing like we just showed on the previous chart. And we need to pay attention to that, this dual mandate of jobs and price stability that the Fed has. These two things are potentially at odds because we have inflation running about 3%, 1% above its long-term target. Yet we do have a definitive slowing in the labor market. Nothing significant, not a recession, not a contraction, but companies rather, are laying off some people in the month of October, and we have seen hiring slow down dramatically, and you've seen the unemployment rate jump up a bit. So mixed jobs data and mixed signals from Fed officials has the market going back and forth quite a bit. But one thing we did receive on Friday morning, there was a speech from a New York Fed president that actually talked about that he believed there was room for a near-term cut. So it seems to be a bit of back and forth. At one point on Thursday afternoon, when the market was selling off, there was about a 40% chance that they weren't or they were going to cut. Said another way, uh, the market was pricing in a Fed pause in December. And then we wake up on Friday and now the market's pricing in a Fed cut in December. So there's going to be a lot of volatility, but that meeting is not that far away. So as we get closer, I think you're going to maybe see some of the Fed officials give a little bit more indication ahead of their quiet period here. And if there's nothing else that the Powell typically likes, it's transparency. And perhaps the commentary we heard this morning from that Fed president out in New York was a sign that we're going to try to get a little more transparency towards the Fed cut, or that's at least how the market's interpreting it with odds of that Fed cut back to 70%, when just one day ago it was down to 40%. That's a pretty big move in one day. So market is trying to figure out what the Fed's going to do in the face of some of the uncertainty around this massive AI spending and a lot of talk about an AI bubble right now. Now, speaking of AI, this isn't a bubble yet, but it's a little bit on the frontier of technologies in the restaurant space. What is potentially being called the first AI-driven restaurant in Southern California has opened, and it's a new restaurant where the dining experience from ordering, cooking, plating, delivery is all robotics, all automated using AI technology. Some people say it's like going to a restaurant in the future. They serve cheeseburgers, hamburgers, fries, pretty straightforward menu, but interesting to see the application of things that we saw on cartoons and movies when we were growing up, perhaps coming to a restaurant near us. It'll be kind of interesting to see. Big question I have is the food any good? So it'll be interesting to see if we start to see those and see what the reviews are of the actual food from these new restaurants. With that, I want to thank everyone for watching, and we'll see you next time.